good afternoon. I welcome you all to the 12th session of the Legal Services Month 2021. Today is the last session of the Legal Services Month 2021, an initiative undertaken last year. And this is the second year in a row. And this year we organized, we organized 12 webinars on varied and diverse legal issues, including the cryptocurrency we are having today, so as to provide a platform for dialogue and deliberations on pertinent legal issues and then work back with the government for policy interventions as needed. I would like to put on record our sincere thanks and appreciation to Dr. Lalit Bhasin, Chairman CII Task Force on Legal Services, Managing Partner Bhasin & Co. and President SILF, without whose support this would not have been possible. Dr. Bhasin is the guiding force under whose leadership and guidance and immense support we are having this Legal Services Month, a series of 12 webinars on diverse legal issues, which are all very important and relevant. So thank you very much, Dr. Bhasin, sir, for all your support. Theme is on regulating cryptocurrency in the new digital era. It is my privilege to welcome the guest speakers of the session. Along with Dr. Lalit Bhasin, we have with us today Mr. Badri Narayanan, Executive Partner Lakshmikumaran and Sridharan. Mr. Badri Narayanan is instrumental in formulating the session, and he has also kindly consented to chair and moderate today's session. Mr. Ganesh Kumar, Executive Director, he was earlier with RBI. So we will also have the central banker and the regulator's perspective on today's theme. Mr. Nishal Shetty, Founder, Wazir X. Mr. Cyrus Ocha, Partner, Financial Services and Co-Head, Global FinTech Group, Fresh Fields. And Mr. Raghavan Rama Bardhan, Executive Partner, Lakshmikumaran and Sridharan. Thank you all for your time, and we look forward to a very interesting panel discussion on the theme revolving around the regulating cryptocurrency in new digital era. There was an article in yesterday's Economic Times that the cabinet could consider the cryptocurrency bill this week and subsequently introduce it in the parliament as the winter session is in the process. The government has held extensive consultations on the legal framework for cryptocurrencies, including a meeting last month chaired by the Honorable Prime Minister. The view in the government is that crypto cannot be permitted as a currency, but regulations can be put in place to allow them to be held as an assets. The regulations are likely to prescribe investment ceilings for individuals in line with those on overseas remittances and also requisite disclosures. The Reserve Bank of India has voiced reservations saying cryptocurrencies pose a threat to macroeconomic and financial stability as well as capital controls. The government has listed the cryptocurrency and regulations of Officials Digital Currency Bill 2021 for introduction in the Lok Sabha among the legislations lined up for winter session. The bill was earlier listed in the budget session also, but could not be introduced as the government decided to rework on it. Tax treatments on gains and profits made on such transactions would likely to be defined in the upcoming budget, as the government is considering changes in the Income Tax Act to bring gains made from transactions in cryptocurrencies under the tax net in the budget next year. Well, this is what the government and the regulators' views on the cryptocurrency. Government is in a favor of innovations in blockchain technologies. Recently, SEBI prescribed guidelines for adoption of distributed ledger technology for monitoring the lending covenants. Payment Corporation of India is working with the Bank of International Settlements for developing a decentralized cross-border payment infrastructure. Investments in cryptocurrencies have surged lately with the expectations of higher returns, and these currencies have also gained wider acceptance among the youth. The proposed bill requires a serious deliberation and contemplation, as the policy choices India makes today may have a long-term ramifications on the strengthening of India's role and presence in the future financial order, where sovereign digital currencies may coexist with select stable virtual currencies, including Bitcoin. We have a very eminent and diverse panel today, and I am sure that above issues and many more will be deliberated in detail in today's discussions. So I will not take any more time. And with these words, I thank you all once again for joining this interesting panel discussion session on regulating cryptocurrency in new digital era. And before handing over to Mr. Badri Narayan, may I request Dr. Lalit Bhasin, Chairman CI Task Force on Legal Services and President SILF, for his introductory remarks, please. Thank you.
Thank you, Mr. Vikas Mohan. This is virtually a valedictory session of the Legal Services Month. So valedictory is as important, you see, as the inaugural one, which we had about 5 weeks ago soon after Diwali in the month of November. That time we had the Honorable Minister also, an Honorable Judge of the Supreme Court, to inaugurate the Legal Services Month, wherein we had about 12 webinars. But this particular valedictory session is remarkable as we have 5 very eminent panelists here as our chief spokespersons on this very important and crucial issue regarding which I do not know anything. About a couple of months ago, I asked Mr. Badri Narayanan, I said, what is this cryptocurrency and all that? So he tried to explain to me. He tried his best, but still, you see, I could not. Thereafter, when this proposal was mooted, initially this was not on our list of webinars, but it was suggested by Mr. Vikas Mohan that Mr. Badri Narayan and some other eminent people, they do want to discuss this in the larger interest, not only of the membership of CII, but in the larger interest of the country also, so that people should know what is this cryptocurrency about, what are the implications, what are the ramifications, what would be the regulations, so all this. So I took it up then very seriously and started reading something about cryptocurrency. So I'm just sharing some of the borrowed thoughts, you see, from very eminent people. But before I do that, I must put on record our deep appreciation of the great efforts made by Mr. Vikas Mohan as the executive director for running this show uninterrupted for more than 5 weeks when we started this Legal Services Month, and for second year in succession. It has been a remarkable performance. I think we had most eminent panelists throughout the webinars, and we are going to bring out a booklet after I've requested Mr. Vikas Mohan to put an expert, because these are all being recorded. So a booklet as to what were the gist of the discussions which took place in the webinar. And I'm sure that this particular webinar also our participant would like to know more about it, read more about it, hear more about it, and also to take it forward. What I've suggested to Mr. Badri Narayanan is that this is not just a one-time exercise. We have to take it forward, say in the month of February or March, or even earlier, after the bill is presented in the Parliament for its passage. So this will be an ongoing exercise at least for 5-6 months. And during our tenure of this task force, I think we will definitely benefit by the expertise there. But what I have read is, you see, that there has been major confusion over crypto assets in India due to multiple messaging by different stakeholders. Our Reserve Bank has red flagged risk from cryptocurrency to the financial system, while North Block is seeking to regulate the asset class in its new crypto bill instead of enforcing an outright ban. According to Mr. Adam Mazzaferro, who is quoted in Economic Times. He is the founder of at Pay, an Australian decentralized platform that operates the tokens. He says that the journey of discovery is very important, very interesting. The journey of discovery that India is traveling in terms of regulating cryptocurrencies is one the most governments have to address and implement according to what is right for them at the time. He says, we believe that it is also important to consider how tech may benefit the general economy and the process that drive many functions along the way. Over time, we take the view that these benefits and efficiencies will come through. Now is the time to encourage innovation in one of the most innovative countries in the world and to attract high quality projects in the space to advance the technology as opposed to driving them underground or abroad to territories as close as Dubai. This is the quotation of which I have quoted from Mr. Toby Gilbert, CEO of the Coin Web, which is based in London, Kiev, and other places. So these are the issues, but more importantly, our experts here will discuss the proposed regulations. Firstly, whether these are required or not required, whether the existing law could have taken, you see, with some amendments brought into it, because what is legal tender? Issue is what is the legal tender? Legal tender is governed, you see, by the law. Therefore, if some amendment could have been made in the existing law to incorporate cryptocurrency also, whether that would have sufficed or this separate piece of legislation would be required to enforce and implement. Because I was reading that what is proposed in this bill, and I've just seen it in my message, that India is considering appointment its capital markets regulator to oversee cryptocurrencies according to people with knowledge of the matter, as authorities look to classify them as financial assets. And it says that crypto rules violators could be fined rupees 20 crores or get jail term. So these are the issues which I think our experts will discuss. I'm very grateful to Mr. Badri Narayanan for taking this initiative of putting in place this very important and significant webinar along with so many eminent people, the experts here. So with this, I hand over now to Mr. Badri Narayanan to please take the webinar forward. Thank you very much.
Thank you very much, Dr. Basim. I must say that you've always been an inspiration for all of us. Even at this age, you continue to go to court and you are a role model for many of us. I must also thank Mr. Vikas Mohan for arranging and being very patient with someone like me over organizing this event. I think we have one of the best panels, I think, to discuss this issue of cryptocurrency, and we'll get right into it. I must say that I've had the benefit of speaking to all of them yesterday as a pre-panel discussion, and we really enjoyed the discussion. So I'm really looking forward to this session. Just so that we are able to move it and give a perspective to all the participants who have joined us, we are going to divide this session into 3 parts. In the first part, we're going to talk about cryptocurrencies and different forms of cryptocurrencies. And we're going to talk a little bit on the drivers of cryptocurrency adoption. We're going to talk about the benefits and, of course, what's a commercial future for this. In the second part of the webinar, we're really going to get into the brass tacks and understand what it means to regulate cryptocurrencies. We'll get different views of how cryptocurrencies are perceived by regulators, what the proposals are likely to be, what the businesses who are in crypto have to say about it, and globally, what's the ways and means by which cryptocurrencies are being regulated and the best practices which are there with respect to that. And finally, we're going to have a third session, and I would really recommend all of you staying behind for that. We are going to go beyond just cryptocurrency. We're going to talk about NFTs. We're going to talk about blockchain, and we're going to talk a little bit about new crypto assets which may come into picture in the future. So I would really recommend that many of you stay there. Regardless of what the cryptocurrency bill says, NFTs are here to stay. The internet is changing. And I think we've got some real experts here who are going to tell us a little bit about that. So that's how we're going to organize this webinar over the next hour and 10 minutes, hour and 15 minutes. We will have question answers in the end, so please do feel free to put it up. In the interest of time and to make sure the flow is there, we are going to be doing the question answers right at the end. But do please keep sending us these questions so that we are on top of it. So with this, I think we've got a great set of panel. So I'm going to dive right into it, and I'm going to get into the discussion of what is a cryptocurrency and growth around it. So right up front, Nishchal, I would like to come to you. Being the founder of WazirX, having run this, probably the biggest exchange in India of cryptocurrency, tell us what is cryptocurrency and what are the types of cryptocurrency and how does it operate, just so that everyone kind of gets a sense of what this asset is.
Look, if you look at pure definitions of crypto, it's a peer-to-peer way to transfer value over the internet. And Bitcoin was the first time that this was possible. Before that, if you look at the traditional way of transferring value on the internet, we use a three-party system. And what I mean by that is you have a financial institution in between. And all these online payments that you do today, all you're doing is instructing your bank to make a transfer to the other party's bank account. As against, let's say the real world, when you pay with cash, what you're doing is you're getting money from your wallet and giving it to the other person directly, and that's between you and the other person. Now that was never possible online, and crypto made that possible. And today you can do that. So today I can send you a Bitcoin, for example, directly to your wallet. I don't need an exchange. I don't need a financial institution. It's peer-to-peer. And the last time something like this happened was information transfer, which is what we call the internet, where anywhere in the world you can transfer information from one person to the other, and you don't need anything. Two computers connected, you can do that. And we see what revolution has happened thanks to that simple information transfer. This is what is the most exciting part, that now what are the possibilities when you can do value transfer peer-to-peer. One of the things that is becoming very apparent is if you look at the financial world today, it's geographically bound. And what I mean by that is if I'm in India, when I think about interest rates, I think about interest rates in India. When I think about financial access to financial products, I think about financial products in India. So we are really localized in our thinking of the financial world. Now that is going to change thanks to crypto, because it's a one global financial ecosystem that's being created. It won't matter whether you're from a developing nation or a developed nation or an underdeveloped, you'll have access to the same financial products and services. So that's where I think the excitement comes, and that's where everyone's so upbeat about crypto. Now the thing is, the state we are in, it's still at the building level, where infrastructure that is needed for this future global financial world is still being built. And that's where all of these tokens come into the picture. Now, when you think about tokens, a broad classification that you can put them into is a token. A token can be a currency. That's like the most popular category that everyone thinks every token belongs to, but that's not true. So currency happens to be one of the categories. The other category is asset. For example, Bitcoin, because it's limited in number, it's seen as an asset. The third happens to be utility. And this is where majority of your crypto tokens fall into. Utility is a mental model is like every website has its own use case. Every token has its own use case on the platform it is built. And the fourth is your security tokens. which is nothing but the idea that you can tokenize securities that exist today, so that they get global liquidity, they get traded 24/7. So these are the four major categories.
Excellent. I think Nishchal, that's really interesting. And before I just go to Cyrus and want to understand a little bit, because I think generally the perception is that whenever we talk about cryptocurrency or crypto asset or what we call as tokens, the thought process is this of being a medium of exchange for transfer of value, which, like you said, is a very small group or class of crypto assets or cryptocurrency or crypto tokens. I should put it that way. But just before I go to Cyrus and we talk a little bit about other tokens which exist, can you tell us, for example, in a very simple layman way, how cryptocurrency is generated and how it is transacted? Very, very simply, if you can tell us.
Sure. Look, I think generation of crypto, it depends on the kind of projects that are built. Let's take the example of the most popular one, which is Bitcoin. So also, end of the day, see, crypto does not really exist. It's just a ledger entry which says that Nishchal owns 4 Bitcoin and someone else owns 5 Bitcoin, and it's just that entry that says how much you own. That's the only thing that comes into the blockchain. And from those entries, you figure out that this person owns 10 Bitcoin and this person owns 5 Bitcoin. So now in Bitcoin, what happens in the Bitcoin blockchain, when it was launched, there was a process which is a process of mining that you have heard. What is mining is nothing but you install a software on a computer and let it do its job. So there's nothing complicated. It's just a software that runs. What happens on that software is there's a puzzle to be solved, a mathematical equation. And the idea is that let everyone try to solve that puzzle. Whoever solves it first gets rewarded with 10 or 20 or 100 Bitcoins. So that's a fixed amount of Bitcoin that gets released for solving the puzzle. And this puzzle on an average happens in 10 minutes. So this is how Bitcoins get generated and come into the system. Now, if you were the one who are running this and you won that 10-minute Bitcoin, you will then go to the market and sell it because you need to recover your costs for running the machines and doing all these calculations. So that's how Bitcoin starts going into the market.
Excellent. I think that's a very, very good. So 2 important things that we came to know. One is ultimately it's an entry in the distributed ledger, and the distributed ledger is then kept in a distributed network, so that there is no way by merely changing one ledger in one node, you're able to change the truth of the system. So that's very, very interesting. So that's the basis on which is there. I want to go to Cyrus. And Cyrus, you've been front and center in this crypto revolution, whatever you may say. Tell us how, for example, cryptocurrency is thought of in developed markets like the UK. And I know when we spoke yesterday, you spoke about how, for example, cryptocurrency has got a much wider definition and it seeks to cover a variety of other things. Can you tell us a little bit about how cryptocurrency is thought of and perceived outside India?
Yeah, sure. And welcome everyone to this session. I mean, I think Nishal's description of the different forms of crypto asset is largely how the UK, the EU, and other jurisdictions sort of see the world as well. I think if I look at the evolution of this space in the UK, everyone started off talking about cryptocurrencies in the same way that we are now. And I think the expectation was very much that these would be used to transfer value for individuals to buy things. There was a period of time where Bitcoin ATMs were put in shops so that people could withdraw their Bitcoins into sterling and spend them. And I think what very quickly happened was that certainly in the UK, there was a realization that Bitcoin actually does not qualify as money. It does not satisfy the key tests for when something becomes money. And the 2 key tests, I think, that Bitcoin falls down on were viewed as whether or not it was a means of exchange and whether or not it was a good store of value. And I think the view, certainly in the UK, was that Bitcoin and other cryptocurrencies, if we use that term, are not good stores of value. A Bitcoin in your wallet gives you little or no guarantee as to the purchasing power of that Bitcoin, at some point in the future. And equally, when the regulators and the Bank of England looked at how prevalent these things were in the UK, they concluded that, whilst they were popular, whilst there were people that accepted Bitcoin or shops that accepted Bitcoin, actually they weren't prevalent enough to become a medium of exchange in the true sense of the word. And so the UK, and to some extent the EU, has moved away, I think, from viewing crypto assets as currency. I suspect, and we may come on to this later, I suspect that they will only become currency or money in that sense when we start to look at central bank digital currencies.
Yes.
But that's I think something we'll get onto later. And actually what that means is that the UK regulators have effectively said, we will be technology agnostic. We won't sorry, I see there's a message, someone saying they can't hear. Can other people hear me okay?
Yes,
Yeah, I
I
can
think,
hear you.
Cyrus, we can hear you. So I think
Okay.
you can continue.
They're effectively going to be technology agnostic. So what they're going to do is they're going to look at what the thing does or what the thing is, and they will regulate it at the moment in accordance with the existing regulatory framework. So to Nishal's point, if a token looks like a share and has the characteristics of a share, but is simply a digitized share or a tokenized share, it will be regulated and governed in the UK according to the rules that govern shares. In the same way, the UK has made it very clear that cryptocurrencies or exchange tokens, Bitcoin, Ether, Ripple, etc., they are simply outside of the regulatory perimeter at the moment. That they are classed as highly volatile, as a highly volatile asset class that people invest in, at their own risk, if you like. Now, there are some nuances to that. Recently, both the EU and the UK has brought certain activities related to crypto assets under a sort of money laundering registration requirement. So it is not now completely unregulated activity, but broadly the message from the UK Financial Conduct Authority and the Bank of England is that they view cryptocurrencies as outside the scope of regulation.
Understood. I think that's a good point that you make. I would just like to talk a little bit about, for example, I think the perception in India tends to be that all crypto is just a medium of exchange, like we said, about as currency. And there is a lot of talk about what happens when this is banned or not accepted as legal tender. If you can just tell a little bit about what a security token is, because that's something which is very interesting, and there's a lot of talk of generating those in the future. So if you can just tell a little bit about a security token.
Yeah, sure. A security token is probably easiest thought of as holding a share. So we went through a whole series of companies raising capital through what were called initial coin offerings, as opposed to initial public offerings. And in that sort of situation, a firm effectively issues tokens or issues security tokens in exchange for cash. And so it has raised money, it has equity in the business. And instead of holding a physical share, or instead of holding a share that is dematerialized in one of the central securities depositories, a Crest or a Euroclear in the UK or Europe, each individual holds their share themselves in their own wallet, whether through a wallet a custodian provider or not. And that share gives that person all of the rights, granted to that share. Now, it may be very normal rights like voting at general meetings. It may be rights to share in the profits of the company. But it could be other things as well. So for example, if you're a hotel group and you want to raise money, you could issue tokens that entitle the holder of that token to 20 free nights in your hotel. Now that has a secondary market value. Over time, the cost of that hotel room might go up, and those 20 free nights might become more valuable, or they might become less valuable. So they have a secondary market sort of value as well. But fundamentally, a security token is really best thought of as a share that is tokenized.
Perfect. Thank you so much for that, Cyrus. I want to go back to Nishchal. Nishchal, just quickly, you run a very successful exchange, crypto exchange. Just wanted to understand the investment psyche which drives crypto adoption in countries like India and other countries. India has been very successful. I should say crypto is found to be popular in India, and there's a lot of adoption of it. So can you just tell us a little bit about this medium of exchange, you as an exchange, and the investment psyche which is driving cryptocurrency in India?
I think there are multiple reasons why someone gets into crypto. And it goes on from looking at it as an investment option. If you look at like the last 10 years of returns, Bitcoin has been like the asset that has given the highest return compared to any other asset class. So that's one of the reasons why people get in. Apart from that, being the early mover in a new technology or a new sector completely. And this is where I think it resonates with the demographic that we see, which is 20 to 30-year-olds. Now, if you take the options that are in front of them, you go back to let's say real estate and gold and the traditional stock markets. Those are sectors where you have people with 10, 20, 30 years of experience. And to a 20-year-old entering these markets, they start way beneath the whole hierarchy. But you look at crypto within maybe 6 months or a year into that, you know more than most people around you. And I think that seems to be one of the factors. And it's always been the case with technology, like anything new, the internet also, you saw youngsters taking on to the internet, and then the rest of the world followed. And I think that is what is happening in crypto as well. I think the other thing is it's a 24/7 market. So what I've seen and heard a lot from people is they have regular day jobs, 9 to 5. And crypto markets give them the flexibility to come back home in the evening, and then they can trade late nights or over the weekends or early mornings. They don't have to worry about that 9 to 5 being the only window to participate in this market. Well, these are all from an investment point of view. I think the other is crypto and blockchain happen to be one of the fastest growing job sectors. So understanding and reading this, and again, this goes back to that whole thing that you don't have to compete with people with 10 years of experience in this market. This sector is 10, 12 years old. So you have 2-3 years of experience. You're like a really in demand person in this sector. So as a job point of view, that it seems to be very interesting for people. The other is a global market. And suddenly now you have a financial instrument you're trading with and competing globally instead of just the local markets. That's another thrill and excitement, I think, for a lot of people. I think I can go on and on, to be honest. There are so many reasons why someone can be getting into crypto. Like for me, it was the technology, and I think I haven't seen or experienced something this technically advanced until I came across blockchain and the way they operate. I mean, just imagine anyone can write into this system, and you cannot destroy it or you cannot change it. It's amazing. We've only heard of companies with high security being able to do that, and here it says that anyone can write into it, and still it is secure. So it's different reasons why people are getting into it.
Thank you, Nishchal. I think very, very nice. Thank you so much for setting the context for the webinar. I think very clearly it's like you put it very nicely. We've been able to find a way using cryptocurrency to be able to transfer value without a financial intermediary between each other over the internet. And there are different types of tokens that are available for us to be able to transact. And therefore, cryptocurrency at one level goes beyond just a medium of exchange. And I think, like you said, there is a future which is attached to it. People have adopted to it. There is an investment climate which is pushing it towards. So this is a nice segue for us to kind of move to the next segment, which is to talk about regulating this cryptocurrency. And there is so much of talk around regulating this cryptocurrency. I remember that when the proposed bill was listed for being the winter session, there was a lot of questions being raised to us, because the title of the bill was the same as the last title of the bill, which was to ban and prevent cryptocurrencies exchange in India, which I think put a lot of people back up. But I think subsequently there's been a lot of talk from the government saying that no, we are not actually really banning cryptocurrencies. We are only going to regulate, or at least thinking of regulating this cryptocurrency. So I thought before we move into a little bit more detailing about what to regulate and what are the things that we should be careful about, whatever we've understood from the debates and whatever we've understood from the earlier bills, I think let's just have a quick summary of what it is. So Raghavan, can you just tell us what the crypto bill and the parliamentary debates and what we know now today regarding the future of cryptocurrency in India?
Yeah, sure, Badri. One which we all have as a handicap today is we don't have the actual copy of the bill as such, while there are press reports that some media houses have accessed the bill, etc., though it is not there in the public domain. But yes, since the time this bill was initially was referred to, it was not put in the public domain. And it was very, very clear that the government used the word prohibit, etc. So it gave an impression, and it in fact led to a lot of furore, that this crypto asset is going to be erased from the Indian continent, subcontinent. So we are not going to have it, etc. But as it went on, later on, committee reports, everything, then the government also said that we want to be more progressive and forward looking. So we could see that different arms of the government speaking in different language. As on date, what we have is, though we do not have the copy of the bill as such, none of us have, but there are some questions which are also posed in the Rajya Sabha, which the finance minister was also asked to answer. And what we get as an overall impression from what RBI says, the RBI chairman says in the press, etc., the ban on cryptocurrency seems to be real. But what this sentence means is crypto as a currency seems to be real. And that is what they say, that private cryptocurrencies will be banned. So far, from whatever we have known, the government is not thinking twice on banning crypto as a currency. And when I say crypto, private cryptocurrencies, what is meant by private cryptocurrencies, what all will come within that is all left to the guess of all of us. But the RBI is totally against using all these crypto assets as medium of exchange, as currency. They don't want to treat it as equivalent to money. So as Nishchal very beautifully started, that there is a financial regulator in between when we talk about normal banking transactions, while in cash it is not there. We know this government is against such cash transactions where we had demonetization. So we are all for regulation. So the brilliant part of cryptocurrency being that it is only between two people is the very fact which is not liked by the government when it becomes a medium of exchange. So what we can expect, it seems, is RBI can come up with some cryptocurrency. Okay, that is not a private cryptocurrency. It is the CBDC, as we say, which many countries have also recommended. Each country may have its own CBDC, which is the currency regulated by the government. Other than that, crypto can never be a currency. Crypto can be held as an asset. We can have cryptocurrencies. It appears that investors can invest in, we can hold it based on demand, supply, the values can change. So all those things can be done. Utility tokens, how we are going to use it, still there is some amount of clarity which is required, whether it is going to be limited, unlimited. But it appears that these tokens may not be allowed to be converted into fiat currency as such. We have to wait and watch how it is going to come up. So crypto assets as currency may not be approved, but crypto assets may be there to remain. So it will all be there, is what it appears, the trend appears to be. So we need to see how it is finally going to be.
Perfect. Thank you. So really what you're saying is that crypto asset as a legal tender, just like what Cyrus said, that it failed the test in the UK and therefore they said that it is not. Here we're going one step forward and clarifying, saying that we will never allow, even if it becomes prevalent, to allow that. That's the perception that we have from that. But that does not mean that we're not going to allow transactions of cryptocurrency in limited fashions. And then it's probably going to be worked in a particular way which allows for that to continue to happen. So as an investment instrument, it may continue to be there. As a utility instrument, it may be there. As a security instrument, it may still be there. But to be able to go and, let's say, go to like what Cyrus said, an ATM and pull out money for Bitcoin, that may not happen in this fashion, and be able to use it to buy, goods and services. That may not be there. Just wanted to check, Cyrus, just to bring you in, this is what the perceived thought process is in India. Just from your own experience as being, looking at this globally, what are the approaches that different countries are taking? Just generally, if you can give us some idea about it.
Yeah, sure. And Dr. Lalit Bashin at the start said, that every country has to look at this for their own particular needs and purposes and their own sort of society tolerances, I suppose. And I think that's absolutely right. We're seeing a huge divergence of approach in relation to crypto assets across the board. I think actually looking at the UK's approach and the European Union's approach is quite instructive in some ways, because they are both very different and they both come at it from different sides of the telescope. So, in the UK, the basic philosophical approach to cryptocurrencies or crypto assets is that, as I said earlier, if they look like something that is already regulated, like a share or a bond, then they will be regulated like they are today, as a share or a bond. And if they don't look like that, if they are simply, a Bitcoin, for example, or a non-fungible token, then they are completely outside the regulatory perimeter. Now, what does that mean? That effectively means that you can do what you want with them. You can buy them, you can sell them. Two individuals can use them to transact, almost like a currency. But all of those transactions will have no protection from the regulator. If something goes wrong, the parties can't go to a regulator and complain. In the UK, if you hold cash in a bank account, that cash is protected by the deposit guarantee scheme up to £75,000. That will not apply to Bitcoin, where you hold Bitcoin, for example. And the UK regulators are very, very clear with the public that they view acquiring Bitcoin as like buying a lottery ticket. It may go up, it may go down, you may win big, you may lose all your money. And that is very much the messaging that's coming out of the UK regulators. And as a result, the way that they approach regulation is to only intervene where they think there is a direct risk to consumers or retail customers or to, the man and woman on the street. So, for example, in the UK, the regulators have banned the sale of derivatives with crypto asset underlyings, so futures, options, swaps, to retail customers, because they consider that to be too risky. And they have the ability to do that because obviously the UK Financial Services Authority regulates the sale of derivatives. It doesn't regulate the sale of the underlying, which, people can transact in, but it does regulate the sale of derivatives, and therefore it can ban the sale of crypto derivatives to retail customers. Another example of where the UK authority is thinking about regulating is in the sphere of financial promotions. So one of the things that the FCA in particular is very worried about are all of these adverts on the side of buses buses and in the underground stations that encourage everyone to invest in cryptocurrencies, because again, they are concerned that there is harm to a retail customer if they aren't adequately protected or don't have enough information. Contrast that to what the European Union is doing, and there what they plan to do is bring in a very comprehensive regulatory regime that will effectively bring all crypto assets, whether it is a utility token, an exchange token, a security token, fully within the regulatory perimeter. And in fact, they are effectively proposing a regime which looks very much like the current European regime for financial instruments. And that means that if you want to operate as a cryptocurrency exchange, if you want to operate as a crypto custodian, you will have to get approved by your local regulatory authority. There will be a regulatory rule book that you have to follow. You may have to hold regulatory capital. To acquire one of these businesses, you will have to apply to the regulator to be approved as a fit and proper person to own these businesses. So a regime that many people on this call will be familiar with in the context of sort of existing financial services products. And I think there are some interesting questions about those two approaches, because when I talk to my clients, there is a real I think difference of view as to which approach makes more sense. There is a school of thought that says that if you bring these assets fully within the regulatory perimeter, yes, there is day one pain. A lot of businesses will need to get themselves regulated. There will be a regulatory burden associated with that. There will be a cost associated with that. But once you're in, you have the kite mark of regulation. You have the ability to innovate your products without the concern that you accidentally fall into the regulatory perimeter because you're already there. And actually, you have a lot of certainty, which a lot of businesses, really want. The UK approach it is different, because I think we still believe in the UK that less regulation is inherently conducive to competition. And by limiting the regulatory perimeter as far as possible, we are making ourselves more attractive to fintechs and other companies to set up in the UK. And I don't know which approach will end up being correct, but what I would say is that the UK's approach is quite piecemeal. And this idea that you just pick little bits of the market that you think cause particular harm and regulate that bit, does, I think, leave firms not quite being able to predict what will happen next. We're consulting at the moment about regulating stable coins, for example. So that is a token which looks quite a lot like Bitcoin, but is actually backed by some underlying asset. So a stable coin might be backed by gold or the dollar, and therefore its value is less, fluctuates less. If we regulate that where it's used for a means of payment, that's another little bit of the market that's being regulated. And so there are some very different approaches, I think, depending on where you look. And then obviously the US is I think, behind the curve here. I think they're still trying to work out which authority all of this stuff sits within. Is it the SEC? Is it FDIC? And again, I think they're grappling with the same questions. And then you obviously have the other extreme, such as China, where they, I think, are much more focused on developing their own central bank digital currencies, and are making efforts to, I think, restrict the growth of privately backed cryptocurrencies, whether they be Bitcoin-like or whether they be stablecoin-like.
Fair enough. I think that's a very, very good overview of what's happening across the world. And I think it's very useful, because sometimes we kind of don't have that balance as to what it is. You kind of try and solve an immediate problem, and that can actually have ramifications beyond that. And some of the areas where we've seen where there is less regulation in India, some of it, for example, in gaming, we find that the players want to actually be regulated. They want to be able to say there is one regulator that I can go to, and I can make peace with that, and then I can do that. I think the only counter argument being that does it limit innovation and does it limit coming up with new instruments? But on that, I think we should get some more perspective from Mr. Ganesh Kumar on what RBI and what the different thought processes have been in the central bank, which really is the voice of our financial system. So over to you, sir. Why don't you give us some perspective of what the thought processes are there?
Okay, thank you, Badri, and good inputs from all the others. Let me start off with a simple statutory warning in the beginning. Since Badri said, what is the thought process in the central bank? I'm not the spokesperson of the central bank. So what I say is not necessarily the view of the central bank, but I will give you sneak previews as to the line of thinking so that we understand this as a concept and see how India is going to go ahead with that. Let me try to start off by making a little bit of a provocative statement. If we were to use the private bitcoins as a medium of exchange, which is what we started off, Nischal did make a mention about it, then I would say welcome to the world of barter. If you, those of you who have studied economics and who have seen the evolution of currency over barter. So if I was a farmer producing, let's say, wheat, and I'll give an example. There's another farmer who actually produces, let's say, chicken. I want chicken, he wants wheat. So we decide what's the exchange. It could be one hen or a chicken against, let's say, one bushel of wheat. It could be that in, let's say, Mumbai. But when you move over to Delhi, it could be 2 versus 2. So there is no uniformity, there is no parity, and therefore that creates a lot of discord in terms of trade. And when it creates a lot of discord in terms of trade, businesses get impacted. And when businesses get impacted, economies get suffered. Which is why the Reserve Bank says, and this is not just Reserve Bank, I'm also aware, I can wear a little bit of Cyrus's hat, the Bank of England and many other central banks, including the Federal Reserve Bank, they are actually trying to see as to where does this fit in for a private issued currency to become a medium of exchange. There's no harm in it being used in a small sector. So if there is, let's say, a shop chain which says that, well, I can accept Bitcoins or Ripple or whatever, that's fine. But if you're going to say that the same Bitcoin can be used in the BEST bus or the Delhi Transport bus or the metro there, then it means that the Bitcoin that I have in a virtual area can also be used to exchange for services or goods that I have. I don't think the entire world is ready at that stage, basically because of one factor. The evolution of money actually, unfortunately, and pardon me, Nischal, there, the geographical boundaries because of socio-political reasons have resulted in some currencies having greater value than the other. I'm not going into the history of that, but if somebody says dollar is X and rupee is something else, that's a historical factor as to it has happened over so many reasons. Now, in a world where there are no geographical boundaries, it is quite possible that an act which is happening, let's say in Iran, can bring down the value of the dollar. We have seen that whenever wars break out. So one of the reasons why central banks world over do not want a medium of exchange which is not backed by anything, there can be huge upheavals, ups and downs, and therefore people who hold that currency may not get the value which they perceive to hold. Suppose I get, let's say, 1 Bitcoin as a salary, and I think in 1 Bitcoin I can pay the rent for my house. Tomorrow, if suddenly that value goes up or goes down, or that private issuer just says, my Bitcoin, I'm going to stop supporting, the value that I have, like Cyrus actually hinted, is actually worthless. Which is why world over currencies issued, when I say currency, this is currency which is backed by either the government, Canada has it in the Queen or in England, or backed by the central bank. These have a value based on an intrinsic item, which could be gold, it could be treasury bills, it could be something. So the way forward, and I'll come to that towards the end of maybe in a couple of minutes, is actually central bank digital currency. So I want to now break the technology from the utility. So crypto as a technology, it is understood, or blockchain as a technology which facilitates crypto is something that the Reserve Bank is gung-ho about. In fact, many people may not know, 3.5 years earlier, it was in 2017 and 18 itself, the Reserve Bank has started projects on using blockchain for financial transactions. Most of us must have heard about letters of credit, which helps in cross-border transaction and trade. Crypto or blockchain-based LCs is something which is a reality. India is doing it. We are doing it for Indian letters of credit. We may do it for cross-border when the banks in the rest of the world are ready. So as a technology, there is no doubt about the capability of this. But using that technology for a medium of exchange which is acceptable across all is where the Reserve Bank has its concern. Because one of the most important things that the Reserve Bank has been ascribed is to maintain inflation levels. This is a target which is given to it, in addition to so many other things which it has to do. Now, if the inflation, let's say the Reserve Bank governor takes a series of steps to ensure that inflation doesn't go high after the pandemic, but some other activity elsewhere brings a problem to it, then what happens is that an act of a person or a group of people in some other part of the world may result in Indians not getting the benefit of their own currency. So that is where there is a problem. So that is where the Reserve Bank has its concern. But treating it like many of us said here, the crypto, the outcome of that technology in the form of a crypto asset, you may call it currency, you may call it Bitcoin, doesn't matter. But as long as it is an asset, Reserve Bank has no concern on that. Of course, there are the payment leg of an asset when the trading happens. If it is cross-border, how do we ensure that the cross-border flows also take place? Maybe there could be, like I said, a central bank digital currency which uses the technology behind it, the blockchain, ensures immediate settlement, notwithstanding time zone differences. These are things which are in the pipeline. There are a lot of sandbox type of testings which are happening. Maybe the technology world, the fintechs of the future may have to come with some solutions. As a regulator, the regulator is open to that. So the short point is, if it is a currency which is backed by something, and that is where the central bank digital currency comes, because it is backed by either gold or a treasury bill or the government backing or whatever it is, varying from country to country. The Reserve Bank is open to that, and that is why the Reserve Bank has also gone into record saying that the central bank digital currency project is going to be actually piloted very soon. So using that, and that may be, it may not be the Bitcoin or a Ripple or an Ethereum, it may be the central bank digital currency of Reserve Bank, which converts an Indian rupee into a crypto-based Indian rupee. I'm just using the word, I don't know what the name is going to be. That is one thing which we need. And one more small challenge that we may face in India is the lack of infrastructural backing to do these technology-based transactions. If you go to for example, to the Northeast, where there is hardly any connectivity because of the geographical terrain, and if I say that I have a Bitcoin, or I have a central bank digital currency, but I cannot use it there, then the purpose of this ubiquitousness of currency gets lost, which is something that cannot be afforded in a country. So there are multiple factors which are taking in. So to me, what it appears is the Reserve Bank will be comfortable with having its own digital currency, given the legal framework that we have in the country today. If the legal framework is changed, and if it says that private people can also issue currencies which can be accepted by everybody, then maybe this is the future. I don't think any country in the world is ready on that front right now. And therefore, like Cyrus said, piecemeal type of things may come in, like he rightly said about the derivatives. Regulators may come out, the sectoral regulators may come and put certain activities which may not be giving the full picture. It'll be like the six blind men and the elephant. To my mind, what I think is India has made a good, like we did when the Information Technology Act came in 2000, which was preceded by a bill. Those days, we never had the internet, so many types of discussions didn't happen. But I still recall there were heated debates as to whether a particular para in the draft bill was good or bad. Similar thing is happening here. My gut feeling is that this may not be the final one, which is going to be finally passed in the parliament, but this at least sets to rest multiple piecemeal approaches, and we will have a 360-degree view of what India is going to do. It may take a little bit of time for it to mature, but I think that is what will happen. And if we can break it from the central bank digital currency to the assets that are there, and that is why, like Dr. Lalit Bhasin said, the view saying that the securities regulator will take care of regulating the assets, which is fine. The central bank will take care of the currency portion, which the central bank will issue today. There may be other things which will come for the NFT, etc. If this type of clarity comes, three advantages will come. One, the ordinary investor or a person who uses it knows exactly what he is doing it, so that he doesn't enter into a pitfall. Like Cyrus said, that without knowing, he doesn't enter into it. That's one, which is happening today, by the way, in India. The second is that the respective fintech or the innovators know which is the area they have to grow, which will actually blossom up that industry, just like as it has done in the payment space, where India is a leader of sorts in the payments, retail payment space area. I dream of a similar situation coming in. We may perhaps be the leader even in the innovation in the, I will say at this stage, blockchain use cases technology space. So that won't be a problem. And the third thing is that customers or users will have confidence. Like Cyrus said, today, I can take it in the case of education. Everybody likes to have a school or a college affiliated to somebody so that tomorrow parents come without any concern and admit their children there. So a regulated entity is always better. So with these three things, I will close my conscientious points. I'm open for discussion, but I think that's the way that the country will go.
I understand, no problem at all. All parents like their children to go to affiliated schools, no problem at all about it. But there is EdTech and there are new things happening which people are kind of getting into. So we'll leave that. But I think your point is very clear that India doesn't like its monetary policy to be impacted by cryptocurrency by having a parallel system of legal tender operating in this thing. Having said that, very clearly they are talking about SEBI regulating. So one thing we can definitely discern is that cryptocurrency will be recognized in some form as a financial instrument, right? So that I think that is very, very clear. So I'm going to come to Raghavan and Nishchal, okay, on crypto exchanges and SEBI, okay. What are your views? I'm going to first go to Nishchal, get a commercial view, and then come to Raghavan in a minute after that. So Nishchal, what do you think of crypto exchange and SEBI? There have been some statements which basically say that SEBI should be regulating or may regulate exchanges. What are your thoughts?
I think right now it's not confirmed. It's just a report, an unconfirmed one. But when you look at SEBI as a regulator of securities, for example, the entire thought process there is very different because it's matured companies with profits, books, and evolved, which come to market, and then you have a regulator who's tasked to look into it. And you look at crypto now, suddenly it's all I would say a 360 turn, where most of them are probably at the idea stage. Most of them don't even have a fully working functional product or a team. They're decentralized, globally located, don't even know who the people behind certain protocols might be. So it's a very different thing altogether. And I don't think any of the existing regulators are in a position to regulate this sector directly. They'll have to, but I also don't believe that, they can't regulate. So the only thing is, I think instead of completely expecting someone to regulate overnight, what India should do ideally is go towards that regulatory process by laying out guidelines and set of do's and don'ts for companies to begin with. And I think SEBI, RBI, anyone, I think there has to be this whole expertise to be built within them. But the thing is, if we don't do it, they'll never have that expertise. And that's why, I welcome any regulator because I don't think there's any right regulator today because no one's equipped for that right away. But I think any regulator that comes in, eventually they'll be equipped to regulate this sector. So it doesn't matter, because the ideal case is it feels like let's have a brand new regulator, but you also know that's in itself a big task. So I think an existing regulator just being able to learn this market and then apply the right kind of regulations there might be the best outcome if an industry wants to get regulated.
Thanks, Nisha. It's a very mature and a very good way of kind of putting it across. And I'm going to come to Raghavan. Raghavan, there are different stakeholders. Okay, we spoke of crypto exchange and this thing. Can you tell us from a regulatory perspective, what are the issues, legal issues that you see, just regulating cryptocurrencies and the different stakeholders?
Yes, Badri, the whole concern is Prime Minister also very recently said that he is worried that all these crypto assets should not fall into wrong hands, etc. Like even the IMF in its report has said that there are few risks attached to crypto as currency or assets, etc. And they talk about the operational stability of the currency as such and the financial integrity of the people who are running it, etc. That is the other risk which has been pointed out Apart from the environmental issues also which are there, which we keep debating on, the most important aspect has also been the investor protection. So that is why I believe our country is following a three-pronged approach. One is ban, regulate, and create. When we say ban, ban is only with respect to private cryptocurrency as currency. Then we talk about regulation. Regulation is where we come in, where that is where a lot of challenges are. Regulation is where what kind of regulation are we going to come up with, and what are the targets we want to achieve, what are the goals we want to accomplish. And then of course create is the aspect which Mr. Ganesh Kumar was also talking about, the digital currency of the central bank coming up and how they are going to create, etc. Create is one part we need not be very much concerned about right now. Ban is something like we have to wait and watch how it is going to be. But the middle aspects there is the regulation aspect, which is for all crypto assets or digital assets, if you can put it in one basket. The central point being the government should have visibility of what is happening here. We don't want a situation where I'm using the word proceeds of crime because what our Money Laundering Act, Prevention of Money Laundering Act uses. So the proceeds of crime should not be used in a less regulated country and skip exchanges, transfer, and finally come up to a regulated market like us. And then finally it looks all fresh and good. So that is what we want to avoid. See, the reports and variations we see is government is mainly concerned about two aspects. One is where the transaction is on a P2P basis, all P2P transactions, etc., where no exchange at all is involved. That is number one. And number two, where even if an exchange is involved, that exchange is beyond the geographical boundaries of India, where it is difficult for India to regulate or get things done through them. So far as the exchanges are within the country and so far as the transactions happen through the exchanges, whatever I have seen so far, government may accept that. But to the extent where it is happened P2P basis, or to the extent it is happening through exchanges outside, the government can as well ask the people to disclose and transfer whatever is happening outside. They may be asked to disclose whatever is happening, and they will be urged to transfer it to Indian exchanges. This is one kind of regulation which is possible. You can say, a range of regulations that are possible. One can be liberal, the other can be very, very conservative, and where the government is too much worried to regulate more. So between this, one is to say that I will allow everything and ask the assis just to disclose everything to the government. Other is, yes, you disclose, but also I want to do only through these particular exchanges which have been, let us use the word, licensed to me within the country. So long as you do through that, I don't. But if you are doing through something else, even if you disclose or if you don't disclose, what Mr. Basin was talking about, coming up with non-cognizable offenses and huge monetary penalties, etc., all those things may be possible. We need to wait and watch where we finally settle in this broad spectrum, but this is where we are moving towards more, it seems.
Very nicely put, ban, regulate, create. I only wanted to touch one other thing. No discussion around cryptocurrencies ever complete without tax. So tell us quickly in 2 minutes, because we do want to move to the next session, next part, which is NFTs and blockchain. Income tax issues, GST lacunas. If you can just tell us in 2 sentences, what are the issues which are there?
See, so long as the exchanges, etc., are not from India, it's been the finance minister has also made it very clear that equalization levy is something which India is clearly looking at. So sure. Wherever that is happening, that 2% is something people need to factor. But other than whatever is the exchanges which are making money out of the source country being India, so there is whatever the exchange is making, there is a tax liability on that. And of course, and the exchanges, it has been clarified very recently also, it is business income. I don't think you and I have any doubt that exchange is doing business. So it is going to be a business income in the hands of the exchange. And the most important thing is
the retail investor, whether it is business and capital gains. Why don't you quickly tell us?
Yes, that is where the one more point is, this aspect is also clear that insofar as exchange is concerned, they are going to be treated as e-commerce operators. both for the purpose of income tax and also for the GST thing, because once they are an e-commerce operator, there is a 1% tax collected source which is going to come in. So that is going to be there. And we are also talking about the TDS under 194O when it is an e-commerce operator. So those things are there from the exchange side. When we talk about the investors, it depends on the regularity with which an investor does and how frequently he does, and whether he is doing it as a normal business itself, or he's just an investor. He is parking his funds into the crypto assets, and once in a while he sells and make profits. So depending on that, it will take the character either as a business income or as a capital gain. So if it is a business income, of course, all the normal business, we have not come up with any special rates, etc. of taxation, less or more. There is nothing specific which has come out so far. Maybe you can expect something in the budget to come. But all other rules relating to capital gains, the 3 years holding period, long term, short term, all those things will apply when it is a capital gain. Otherwise, it will be taxed as a business income.
Fair enough. And of course, I think there's something issues in GST where there is a problem with respect to if it's treated as goods, whether it will be falling in a particular schedule, but we'll come to that.
I think that is also there, and also the 194Q, the TDS, which is there in the hands of the investor who is a buyer, and also the TCS liabilities, those are also there. That needs to be taken care of.
Excellent. I think very, very interesting. So disclosure, regulated entities will be allowed to operate, legal tender not allowed, and then whole host of other ways by which we want to make sure that retail investors are protected, inflation and monetary policy is taken care of, and there's disclosure to ensure that these funds are not forming parts of proceeds of crime in money laundering and other activity. I think that's something which is there. And like we said, this bill or act which comes in may not be the final say on this. It's likely to be amended, and there's going to be some changes in the future. Okay. Now to the last and fairly exciting piece, which is blockchains and NFTs and other crypto assets. First and foremost, I found it very, very interesting that there is a website called blockchain.gov.in, okay, and which basically is providing various initiatives the government is doing to adopt blockchain for the purpose of being able to do that. It's talking about using blockchain and land registry. Apparently, Goa is trying to collect and make its GST registers on blockchain. So blockchain as a technology is something which is very interesting and something which is becoming more and more prevalent. Nischal, can you tell us quickly about blockchain and what are the pros and cons of the technology?
Look, I think if you think about just blockchain, it's just a ledger, and there are two broad categories of blockchain. One is permissioned, the other is permissionless. Now, what do you mean by permissioned is that a set of players who trust each other run that chain amongst themselves. A lot like your intranet within a company, where only people within the company get access to that network, and that's where permission blockchains come in. And these are not publicly writable, and they don't need crypto in them because they're protected by those few players who manage and run it. The other is the permissionless blockchain, which exists in the public domain, and anyone can build applications and run different kinds of products on top of it. But the only way you can have a permissionless blockchain is to have crypto to protect it. There's no other technical way to have a permissionless blockchain in the open without crypto. It's not at least possible as on today. Because crypto acts as the way to protect that permissionless blockchain, which otherwise without crypto will be spammed, and you'll not be able to use it. So these are just the two kinds of blockchains, and this is where sometimes there's a lot of confusion, because permission chains, if you think about it, they're more, we should not really be bothered about permission chains because they're in the domain of private players and they do what they want to do. They can even run MySQL systems and amongst themselves, and no one should care much about it because it's just a tech use inside few players. But when you think about permissionless, what you're saying is even if you were the one to launch a chain, you still don't have control over it. And that's where all the concept of immutability and making sure that the data has not been tampered, all of them come only when you don't have control over that chain, and that can only be done in a permissionless manner. So yeah, these are two broad classifications.
Very interesting. Thank you. And I'm going to come to you right at the end on blockchain a little bit more. But Cyrus, I want to come to you on NFTs. Okay, that seems to be the next hot topic under crypto. Okay, can you tell us what are these NFTs? How are they transacted, and why they are becoming the hot topic in today's internet environment?
Yeah, sure. So, I mean, at its simplest, an NFT is effectively a token, just like the tokens that we've all been talking about, but it is a unique token. And that's the main difference. It is non-fungible, NF.
Yeah.
It's a non-fungible token. And what that means is that the token, the thing itself, the token becomes the asset in its own right. It is not like a Bitcoin where another Bitcoin has exactly the same value. It is a one-off thing. And the reason why I think these are becoming so prevalent is that they allow a huge number of institutions or individuals to start to monetize something that previously simply couldn't be monetized. We see NFTs a lot in the digital art space. There are digital artists selling their art by way of an NFT. We also see NFTs in a sporting context. So you can buy, if you are a fan of a particular football team, the NFT of their cup-winning goal. Now, what does that actually mean? We think it means you have the digital rights to that piece of footage. And those digital rights are represented by your holding of the NFT. Some artworks, the NFT is the artwork in its own right, and so there are sort of different types of NFT. I think NFTs are one of those great examples that show you why regulators have such a hard life, because when the UK was doing its review of crypto assets and what should and shouldn't be inside of scope, you cannot find the word NFT in any of those consultations or policy statements. I think they are really something that's come to prominence over the course of 2021 and possibly the back end of 2020. At the moment, NFTs are certainly in the UK viewed just like a collectible. They are not financial instruments within any of the relevant definitions, and so they are also unregulated things. The only thing I would say is that I mentioned earlier that one of the aspects of crypto assets which the UK and others are very keen to regulate is this point that was touched on by a few of the panelists around their potential use in money laundering activities. And so we have a money laundering regime which requires firms to register and therefore have KYC, AML processes in place when they have clients who they assist in the exchange of crypto assets or the purchase of crypto assets. And that regime, we think, probably also applies to the sale and exchange of NFTs. So, an interesting development, one I think we'll see a lot more of, also used, I think, by sort of social influencers and celebrities to monetize parts of their kind of portfolio of digital rights. And one I think we'll see a lot more of, and an area that I think regulators will eventually want to look at. And to the comment that's just popped up,
yes,
I think that's absolutely right. Artworks have been used to launder money in the past, and in the UK, if you are a fine an art market participant, you have to register for anti-money laundering purposes with the UK tax authorities. And one of the interesting points here is that if you also facilitate the auctioning or the sale of NFTs, it seems that you actually have to register under a different regime. And there's talk in the UK about whether that makes sense or not, which is ongoing.
And I wanted to just ask you another thing. I know NFTs are digital assets, they're intangible, they're non-fungible, but they are transacted very much by contract. So just wanted to give you a perspective on dispute resolution and issues with respect to that. What are your thoughts?
Yeah, I mean, it's a super challenging area and one we could probably spend the entire session on talking about. I think crypto assets in general really make legal systems really go back to basics to work out what type of property these things are, where these things are located. Many of the traditional methodologies for working out where something is and therefore what the relevant law is are hard to apply to an asset that is held on a distributed ledger. In the UK, we typically use this formulation of the place of the relevant account, for example. Well, where is the relevant account? If the account is held everywhere and nowhere at the same time. And so I think, your ability to litigate or prove ownership over these assets remains a challenge. We are seeing some clients try to deal with that by carefully selecting applicable law in a relevant service contract or in a relevant contract for sale. But I'm not sure that in itself is exclusive or conclusive necessarily. And I think the advice that we're giving our clients at the moment is there are some sensible precautions that you can take. There is some sensible diligence you can do. You can look at the most natural jurisdictions that may be relevant to answer that question. But actually, there are some pretty big questions which I think will require changes to legal systems before they can be entirely resolved.
Thank you for that, Cyrus. And I think I'm going to ask the last point to Nischal as we are coming to a close on this webinar before we take question and answers. Any predictions about the future of crypto and crypto assets in India?
I think in terms of growth, we are about 15 to 20 million people in India today who are into crypto. And this is going to go to 100 million in the next 2 to 3 years. That's something that we are clearly seeing. In terms of asset holdings, we have about $5 to $6 billion worth of crypto assets being held by Indians. And I'm sure that will go to maybe 50 billion in the next 2 to 3 years. So there's a lot of value being generated. Apart from that, I think in terms of as a job creation sector, this is one of the fastest growing sectors there, and we are going to see tens of thousands of new jobs getting created as well. So I think that's more from the metrics point of view. I think the other thing is if you look at the kind of products and services that we've seen in this sector in India, it's been mostly centralized products that offered you access to the decentralized world, like exchanges, for example. Exchanges in themselves are not really built on top of the blockchain. Exchanges just allow you to purchase or buy and sell crypto. But the true innovation lies in you being able to use decentralized products and services. And that's where I think the next phase of growth is going to happen, where we'll see a lot of blockchain related products and services being built for India, because now India has a sizable market of 20 million people. Previously, most of the products in the decentralized ecosystem have been built for the global audience. Now, I think we'll see a lot more startups emerging, which are focusing on the India market, especially with new concepts like play to earn, for example, where you have games where you can play and you start making money through crypto assets and crypto tokens. I think those will be focused on the Indian audience because the requirements are very different compared to, let's say, some of the upcoming games that have become popular play to earn, like Axie Infinity. it's big in the Philippines, but not in India. So I believe that there'll be India-specific products and services built. And we have about 500 startups in the country today in crypto. I think that is going to go into the thousands because we're seeing a lot of VC funds coming in, focus on the India market. So overall, I think it's very positive for the Indian sector. And for us, we are still at, I would say, we just have that initial ingredients set up right now for success. And we're going to see a lot of growth in the next 2 to 3 years in India.
Thank you. Thank you so much. I think with that, I want to just hand over this to Vikas. I know we want to do a Q&A. There aren't too many questions and answers in the Q&A, so we can finish that quickly. So over to Vikas. How do you? Thank you very much for helping us put this together. And do let us know if you want us to take up the Q&A now, or would you like to give a vote of thanks along with Dr. Bhasin?
I think we still have some time, and since there is a lot of interest and participation, and there are a lot of questions in Q&A and chat, we can pick few of the questions. It may run over time for 5-10 minutes. So let's pick up some of the questions and try to address those questions.
Sure. So one question I think maybe Nishchal you can talk about is, for example, they say for mining a Bitcoin, there's a lot of power being consumed. Is there something which harms the environment? Can you give a quick answer to that?
I mean, it is true. There's a lot of power being consumed. But I think what is not really clear is Bitcoin mining, for example, the industry uses more clean energy than the global average clean energy being used. So that's something that usually people don't talk about. The other is, if you look at the ratio of the power used to protect the value, which is $1 trillion, it's a very small percentage of investment going to secure $1 trillion network. So there are quite a few. But again, having said that, I think if you can reduce that energy, which is what other blockchains are doing. So it's not like the entire industry is like that. Bitcoin is a different concept, and it needs it, and it's ongoing. But the newer blockchains are built more on proof of stake and other consensus protocols, which don't really require that huge an amount of energy. But I don't think Bitcoin is going to change it. Proof of work is also one of the most important consensus protocols, and I think it's going to run. But I believe this industry will be the fastest to reach 100% clean energy compared to the rest of the industries around the world. I can guarantee that, because the kind of innovation that you're seeing in the mining industry in crypto, it's unheard of and unseen. I think Cyrus has something to add.
Cyrus, I think you want to add something to it, right?
No, I mean, I was just going to make the point about the difference between proof of work and proof of state,
sure.
Which I think is an important one. And I suspect, as Nishal has said, that we will increasingly see new blockchain as this develops, we will increasingly see proof of state, which is much less power intensive than proof of work.
Perfect. I think next question to you, Cyrus, and I think there's multiple questions. We'll keep getting confused. They keep asking us, how is the value of cryptocurrency derived? Okay. Is there an underlying asset?
It's a good question. It's a good question. I mean, look, if we take cryptocurrencies like Bitcoin, the theory is that there is a finite number of Bitcoins available to be mined. It is supposed to be like a form of digital gold, where once you've dug the last bit out, there is nothing left. But what gives gold its value? If the whole world clubbed together and decided that gold was just rubbish, it would have no value. And I think Bitcoin does not have anything underlying it that gives it its value. It only has value because today there are people in the market that are prepared to buy it.
Yeah.
If that position ever were to change, Bitcoin would have no value. You couldn't melt it down and make something else with it. It would literally go to zero. And that is partly why it is such a confidence driven
Product.
thing that when Elon Musk makes a statement about Bitcoin, it drops 15%. When someone else makes a positive noise about Bitcoin, it rises X amount of percent. And that's what inherently, I think, makes it volatile. I think the big question is that if, as looks likely, Bitcoins will not become a means of exchange or a widely accepted form of buying things in the physical world, where does the utility of investing in the thing end? And I think that's a question that some people have. Contrast Bitcoins and other forms of cryptocurrency with stable coins, which do have an underlying. And so, in the UK, I think stable coins are viewed as having much more of a chance of becoming widely used as a means of payment, because it could be that intermediate step between Bitcoins and central bank digital currencies, where you have a digital token which derives its value from sterling or oil or gold, or something else which is viewed as being an intrinsic thing and therefore makes it more stable. But I've seen all the comments come through on the chat, and it is a good question, and I think people will have different views, but my view is that it is simply given the value that someone is prepared to pay.
Thank you. And I think that's multiple questions, and I think everyone keeps asking whether is there something really, really behind crypto which is giving it value. Okay, last one I'm going to pick up. Raghavan, somebody asked us about accounting aspects of crypto assets in a books of account. Okay, any thoughts on that? You're probably the best person to answer this.
As of now, the CII Institute, I feel, has not come up with anything. Accounting aspects, most countries have been treating it as any other commodity, so normal rules of revenue recognition should apply for this as well. I don't see anything different as of now, unless we adopt a different method through the regulator, which is ACA, which we come up with.
Excellent. Okay, I think with that we'll kind of end the Q&A. I think we've answered most of those. Others are a little bit more technical, and we'll see if we can send answers to you. With this, I'd like to really thank everyone on this panel. You've all been so great, and I think it's been a wonderful interaction talking to that. I want to give this over to Dr. Bhasin for his ultimate validatory thanks to the panel, and then over to Vikas for his vote of thanks. So over to you, sir.
Hello, can you hear me?
Yes, we can hear you.
Yeah. So I think it was a great learning experience. I thought that we are like attending a continuing legal learning course, because firstly, it was entirely a new subject. So it was good to feel like a student to learn something about which we had not had any experience before that. Although after putting in 60 years in my law practice, I think it's good to be back as a student. And I thank all the worthy panelists and the chairperson and moderator, Mr. Badri Narayanan, for giving us this opportunity of learning something about cryptocurrency and the advantages, the benefits that we will get, as also the deficiencies and the roadblocks that it will face. It is still in a melting pot. It is evolving. And as Mr. Raghavan also rightly said that, you see, we will have to cross many milestones to achieve what will be the ultimate thing. And as Cyrus also said, that eventually we have to see what is suitable for a country like India, because it is not that you can compare all that. But having said that, we are in an age of globalization, where now there are no geographical barriers, and possibly crypto may help in removing these barriers if at all they exist. So once again, my thanks. But please do not think that this is the end of the road so far as we are concerned in CII task force. We will carry on this debate under your able guidance and leadership in the next couple of months or so. So I thank all the eminent panelists and the moderator, and also Mr. Vikas Mohan for having put in place this stupendous, webinar series, in which we call the Legal Services Month. So I'm very happy to declare this webinar series month as closed with this exemplary webinar that we have had today. So over to CII, who must have the last word. Over to you, Vikasji.
Thank you very much, sir. No, I must say that as I mentioned in my initial remarks, that it is because of all your support and leadership and guidance we were able to manage and then do this, I think, in most effective way, because 12 series of 12 sessions over many pertinent issues. So I think it was a success, and we would, of course, as under your guidance and under the ambit of the legal services task force, we would carry it forward. And as you also have rightly put in, that it is not the end, though it is formally the end of the legal services month, but the initiatives as well as the aims and the agenda of the task force would continue. So of course, again, put on record my sincere thanks and appreciation on behalf of CII for your all support and leadership and guidance to this initiative, and also specifically to the panel of this session. I think, as Dr. Bhasin mentioned, that to me also it was a bit of a new thing, and I also didn't know much about that. But then in last 90 minutes, I think at least the basics got clear or understood, that what this is all about, the C of the crypto. And I think what I could understand is that India is also at a very initial stage, and as Nishal has put in, that there is a lot of opportunity, a lot of scope, not only in terms of taking the country forward, but in terms of employment opportunities also. And then this may not be permitted as a currency, but I think maybe put in place to allow them to be held as assets, of course, within the prescribed regulations. And I think we have got a long way to go. And as also Mr. Ganesh Kumar from the regulators or the central bank's perspective also mentioned, that I think RBI is clear in terms of that apart from the legal tender, all other activities in terms of bitcoins or blockchains, and then government would be in positive mode in terms of taking the initiative forward. And then let's see what the parliament, the bill will take shape, and how the law will be formed. But we are completely run out of time. So thank you very much all, Mr. Ganesh Kumar, Mr. Raghavan, Cyrus, Nishal, and of course to Badri for so effectively steering and moderating this session. Thank you all. And of course to Dr. Lakshmikumaran Bhasin sir for all your support. Thank you very much.
Thank you so much. Thank you, everyone. It's been brilliant.
Thanks, everyone.
Thanks to all the panelists.
Thanks. Bye.
Thank you.